Welcome to Perusing's Appraisers on Purpose podcast. Our podcast showcases inspiring appraisers and professionals from the industry who are leaders in their field. How did they get to where they are? What have they learned along the way? What can we learn from them? Your host is real estate investor, entrepreneur, and appraiser, Michael Hobbs.
Well, happy 2025 and welcome to another just engaging and enjoyable podcast session here at our Perusing's Appraisers on Purpose. We're excited to have Ken Dix join us. Ken, thanks for joining us today.
Thank you so much, Michael. It's a pleasure to be here.
I appreciate it. And as so many of our returning listeners know, and some of our new ones as well, is it's your thoughtfulness and generosity that continues to not only subscribe and like the podcast, but continue to share it. Always wonderful to hear from those that are like, oh my goodness, I had no idea. And I learned so much because someone else was so generous, just to share a little bit about what they've experienced in their life and what they've done and how they kind of gotten to where they're at today. So Ken, everybody wants to know, were you born this way, or, how did your life come to intersect the appraisal and valuation profession?
Sure. I mean, was I born with a clipboard in my hand? Absolutely not. Right?
Thank goodness. That's been a tough birth. I don't know what to tell you and your mom.
My mother probably still wouldn't be speaking to me if that's what it was. But I was born curious. Is how I would put it. So I fell into appraisal in college, and my really? Story about finding the first appraisal firm finding me was I was a senior in my 4.5 years of college at a
good for you. You didn't take 6.
I didn't take 6, right? I took 4.5. Well, it was 4 3/4 for that last class, but
okay.
But I was sitting in class one day, and the introduction to real estate, the professor came in and said that a local firm, Bay Area Appraisal Services, was looking for a research assistant. And he told us where they were. Mm-hmm. Thoughts started spinning in my head. Well, that's on my way to my night job. So if I can pick up another $10 or $20 so I could either put gas in my car or buy an extra 6-pack of beer that week, it may be worth it. And sure enough, I fell into that and just took to it like a fish takes to water. And I was very lucky to have very conscientious mentors that, drilled in me that this is a professional path and it's there for you. It's there for you to take it and do with it what you want. But when you're working here, this is what we expect of you. And
that's phenomenal.
Yeah, really, really had a high bar. I worked for one of the few in the early 1980s, one of the few designated MAIs that was a female persuasion. Mm-hmm. And she broke into the field quite well. Had a very successful office back in the early 80s.
That's amazing. So I'm going to gather, based on the way you said it was an instructor, a professor from your course, that you were in and around some real estate in going to school, or were you headed off towards politics, or you're going to be, agribio person, or what have you?
So my career in college was I was going to be a marine biologist, and then organic chemistry got in the way and told me that, Ken, you're not going to be a scientist. And then I took out the catalog. I went going to a private school, and then took out the catalog of the public school that I could transfer to and reduce my college costs by 90%.
Oh my goodness.
Looked in the catalog and saw that what's the quickest way to get a college degree? And business. And then business administration with a concentration in finance. So I liked math and I liked research. Those are the skills that I did recognize that I had, other than scuba diving and laying in the sun at the beach.
You know what, Ken, I just want to say that I'm excited if you're going to tell us that you are one of the leading scuba diving appraisers in our profession. I'm like, that's just going to I'm just be tickled pink, as they would say.
Well, if you were to count between 1983 and 1985, yes.
All right. 2 thumbs up on that one. Right. I love these podcasts. There's always somebody with a first. And clearly yours is the first.
Yep.
You own 1983 to 1985 for scuba diving appraiser.
Right. And then the thing that does change scuba diving for most people is life insurance. When they tell you that they will not cover you for accidents in scuba diving, and if you have a family, that usually puts a kibosh on that.
That's true.
So
that changes things up there. Wow. Yep. So here you are, and what part of the country were you going to school in?
I went to University of South Florida.
Oh, so you were just basking in the sunshine.
I was. Tampa was a super trend city back then, still is, and is a great place for, I have to say, placement out of that school was really, really high.
That's great.
A lot of people got jobs right out of the business school in the local economy, because Florida's a service economy.
Yes.
And there was a lot of need for accountants and people with business backgrounds.
And there you were, curious graduate.
Yep.
Looking for a way to put gas in your tank.
Looking for in my 1973 Plymouth Fury that was getting about 6 miles to the gallon. Absolutely.
Man, I didn't know better. I think you'd had a boat engine instead of a car engine.
We called it the boat. We called it a land yacht is what we called that boat.
Oh, gotta love the big old cars of the 70s.
Yep.
Wow, that is something else. So you get this opportunity. Did you start out there part-time then?
I did. I was part-time. One of their appraisers left that I was doing. I was his research assistant, and he left, and then they offered me a position to be a trainee, or
Oh wow!
What we used to call trainees.
Yes.
So novice.
Novice, yeah.
And they told me it was going to be about a 2-year journey. It took me about 3 to 6 months to be able to sign my own report.
That's great.
This was pre-licensing.
Yes.
They started me in residential. Residential was a great training background, training platform with residential, because it was very structured. The form was structured, but they made sure and they encouraged me to take as many appraisal institute classes as I possibly could in those first 2 years.
Wow. That's great guidance. I assume that's because the owner of the firm was a designated appraiser themselves?
Yes, she was RM. Back then it was RM. She's now the SRA, and then she became an MAI. She worked with a firm out of Orlando that had 5 MAIs in it.
Really?
And then she opened her own shop in Tampa. So her name, I really owe a lot to Diane Gilbert, and she recently passed, but she was very instrumental in. I want to say we had 5 appraisers in the office, all under the age of 25 at the same time. And to be able to manage a crew like that is quite the task.
That is quite the effort to manage 5 of them at once. That take a different level of energy.
Yes, it does. Yes, it does.
Wow! And you mentioned that there were 5 MAIs over in Orlando.
Yes. She worked with a firm that did a lot of DOT work.
Oh,
domain work. Yeah.
Great exposure. So did you stay in residential through that course, or with MAIs? Naturally, they tend to do more commercial work. Were you moving in that direction?
Well, I was kind of moving in that direction. So I really gravitated towards some of the bigger projects. Like we would do master certificates evaluation for the VA, which was we have to develop a cash flow for a subdivision. So back in the day, VA would approve a development. And in that development, for each development, you had to give a valuation for a base model. And then you had to give support for all of your adjustments. So back then it was a lot of money. It was about a $5,000 or $6,000 assignment. But once you got approved to appraise in that development,
yes,
it was really good. So I took that really well. And then one day my boss was working on something, and she walks in what looked like a big Singer portable sewing machine. And she says, "Ken, come over here. I got something for you." So what's that? She goes, "It's a portable computer. And I am tired of doing my discounted cash flow analysis." And then she calls me into her office and says, "Hey, we have a new piece of equipment for the firm. It's a portable computer. What do you know about Lotus 123? I said,
"Oh, wow."
think Lotus 1, 2, 3, isn't that like a spreadsheet thing? She goes, yep. She says, I'm tired of doing my DCFs by hand. So I'm going to give you all the information. Here's a couple of days. You have a couple of days for this. Let's see if we can do a 5-year discounted cash flow analysis. And I just locked myself in the office for 2 days and came out with it. And we were very happy with the results.
That's amazing.
From then on, I was a candidate to go on that commercial track. And I worked with her doing some market studies on some self-storage and a couple of subdivision analysis. And then from there, I stuck with the commercial side of things.
Oh, that's amazing. And what wonderful exposure so early on to having a computer and specifically jumping in on Lotus 1, 2, 3, which anyone who's been around for a longer period of time knows that was the anchor program.
It was the be all and end all, right? Life couldn't get any better for anyone in the finance field.
And it suddenly the adding machine and the 6 columnar rule pad went the way of the horse and buggy.
Sure. And the great thing about using a 25 or 26-year-old to do this is they can read the 6-inch screen, right?
Isn't it interesting how we've come back to that same approach? We're back to like a 6-inch screen these days, but now it's color instead of green on black.
Yep.
Oh my gosh, what an amazing experience. So did you have most of your time then spent in the office once that technology came through, or were you still out in the field?
We were out in the field. We did a lot of field work, and they were very keen on having us in the field and training us for being out in the field, right? One of my early experiences, I think when I first started this, I was doing construction draws. And they warned me that you may come across a situation that may not be above board. So I'm out doing construction draw on a house where they were supposed to have all their lentils in on the windows and tying their top of the wall structure together. And the guy says to me, "You like golf?" I said, "Sure. If you say this is done, I can get you a new set of golf clubs." And because of the preparation they did for me, I said, new set of golf clubs would be nice, but you're probably, 1,000% short of what it would take for me to lie for you.
Oh, that's good.
Because I need to move away from this place to where no one would ever find me if you're going to ask me to do something like that.
That's a great trained response.
Yeah. And that was the training that we had. Who would have thought it's not something you would think that somebody would train you on. But I was prepared to be able to make that response. It was good.
That is quite the experience. Did your golf game improve, more importantly?
No, my golf game has never been. If I am, the thing with golf in me is if I can golf my weight, then I'm happy. So every year as we go on, my what's par just keeps increasing, and I'm not disappointed.
I love that reference, and it gives me hope. I just tell people, hey, I'm good. I'm a real solid player when it comes to golf scramble. That's my contribution. A couple of good shots over 18 holes across 4 people.
Yes, it'll keep you interested. It can keep you interested. That's what I enjoy about golf. If I make a couple of good shots, then I'm still interested. So,
that's amazing. That to have that kind of tie-in, to have that type of training, and then more importantly, to be that well grounded makes a big difference. And obviously it's so important to the profession.
Sure. Then after that, after 5 years with that firm, I did commit to 5 years with them. Unspoken. It was spoken. It was never formalized, but I said, I give you 5 years for this. This is good. I found my wife and I, after about 5 years, we decided we moved back to the Northeast. And I was able to.
Did you say move to the snow territory?
Move to the snow territory, yes.
Oh my gosh!
Yes, we kind of missed it. Both of our families,
Oh, okay.
You start to miss family, and we both came from big families, large families, and parents were starting to need some assistance. So we made our way back north, and I was able to land a job with a fee shop up here. Learned Florida and Massachusetts couldn't be further from what, data, just from a data standpoint. And Florida, you worked in the county, you went to the county office. Massachusetts, there's 351 towns. If you want to know what's going on in the town, you had to visit each town.
Oh,
so
goodness,
you spent a lot of time on the road doing the appraisal work. You probably spent 3 hours researching comps, and 45 minutes of those was driving to the comp and taking a photograph. And the balance of that time was doing the research at the town hall.
Mm-hmm.
And then after about a year of that, and when child number 2 came along, that was like, I think I need to find a job that has insurance and a little more stability and stuff. And I was able to land a job at a local savings bank.
Oh, really?
That needed an appraiser. That was doing appraisals for loan renewals. So when you had something on the books, they would do an internal appraisal, and we took care of our customers, and it was a service that the bank provided. So it worked out really well. I got to learn all about that area in Massachusetts, central Massachusetts, which goes from the southern border in Connecticut all the way up to New Hampshire.
Oh, wow.
And it was really good exposure. And then I started doing review work in the bank, and I took it from there.
Did you learn review work just because you were actually reading reports that the bank had received on assignments, or was there any type of training for review work for you?
The training was working under the tutelage of the chief appraiser there, but it's basically, we have this appraisal, read this and tell me what you think. And I have to say, I fell into it. It was really a good experience as well, because, the first thing that you learn about appraisal review is you don't reappraise the property. That's your tendency as an appraiser, is to reappraise the property. Yeah. But you want to make sure that the appraiser is hitting all the points. And this was back in the day when R41C was out there. I don't know if anybody remembers that. That was a regulatory expectation from it was an interagency guidance that precipitated all the appraisal stuff in the 1990s. Mm-hmm. So you want to make sure that the appraisal made sense. And the regulators expected us to have someone on staff who could read an appraisal report and understand what it was. And I learned. Yes. I learned quickly what makes good appraisal and what doesn't make good appraisal.
And so at that point, you've been in the industry for about 10 to 15 years?
So that was year 7.
Oh, year 7. All right. So
right around year 7.
So in year 7, obviously different today, but back at that point, what were a couple of the highlights and lowlights that you quickly identified? So
the lowlights was just as the first financial crisis hit. So in 1987, 1988. Mm-hmm. So I got to see a lot of really bad work.
Oh my gosh.
Money was loose, and things, people were doing things that just weren't right, like subdivisions. You just say, I got 35 lots at $50,000 a lot. 35 times 50 that's the number. And the banks were lending on that, right? So this is before all with FIREA and stuff. So I got to see some really lousy stuff that you could see that the appraisers were advocating for something other than the value that they were doing. Right. But then the good stuff was when you get in a distressed market, you start to see how appraisers really take an analytical approach to make sure that they're building a level of confidence and accuracy in what they're doing. So we started seeing much more discounted cash flow analysis. We started seeing much more sophistication in the way the income approaches were being developed on properties. And we saw how distressed properties were being handled. I mean, it's one thing, when you're in a distressed market and you had an entity like Recall out there dumping properties at 20 cents on the dollar, does that mean every property is worth 20 cents on the dollar? No, it doesn't. You really have to pay attention to supply and demand, and you really started expecting and requiring the appraisers to give you a better read on what's going on in the marketplace.
Wow. So is it fair to say that you sometimes knew what the results were going to be before you got into the report just because you saw whose name was on the report?
Yes.
Yeah.
Absolutely.
I hear that over and over and over again.
And then from there, luckily, the bank was bought out and merged with a large regional bank. And we had a national lending footprint. So from there, I was doing review work. And what was really unique about this lender was if we were participating in a loan and we didn't order the appraisal, they would send a review appraisal to inspect the property, review that appraisal, and validate as much information as you possibly could. So we would be making the phone calls, we would be doing the research at the local municipality. And it really expanded my horizons on how the economics of real estate works, not just in my little part of the world. What was going on in Arlington, Texas was pretty much similar to what was going on in Worcester, Massachusetts. Same concepts, right, from a valuation standpoint. And it really, really opened up my perspective to see how, consistency of process is so important when it comes to accuracy, developing accuracy and confidence in appraisal work.
For you, you're getting that opportunity because the bank went through a merger and they're lending in a national capacity. And then have this more thorough review process.
Correct.
I mean, wow.
Yep.
From, hey, I was, here in South Florida, and now I'm here in the Northeast, and now I'm looking across the whole country.
Sure.
And no two markets are necessarily moving in the same direction at the same time.
And they were still doing internal valuations on legacy loans, stuff that you had in the portfolio. So it really, broadened my horizons. The most interesting thing that I worked on was at the savings bank, and it came into this national bank, was we had a borrower that had 5 small hydroelectric power plants.
Oh, interesting.
1 or 2 turbines, very, very small.
Mm-hmm.
And I was able to, develop valuations for them. And, you have a little bit of luxury because you have time. You don't have the time constraints that you have when you're out in the field where you need to have something done in 2 weeks. So I was able to build up competency. For that type of property, very specialized properties, hotels, high-rise office towers, multi-tenants. So these environments really fostered the ability to develop the skills to be able to either appraise it or do a review of that appraisal. And sometimes, depending on the loan circumstance, we would have to do a standard 3 review. And we had to opine to the value. And they gave us the support for that.
What an amazing employment opportunity to develop that level of exposure and experience.
Yep. Yes.
And then build competency along the way.
And so I was fortunate to really come up the ranks during a lot of economic turmoil, and where regulatory pressure had to be really high to make sure that standards were being brought up across the board for everybody.
Amazing. And so for you, did you continue to expand in the review world, or did you move up, as some people do, along the more management side of the bank?
Sure. So I had so that large regional got purchased by a national bank, and I ended up opting not to stay with that review team, and I did a 2-year stint as a tax assessor.
Oh, really?
Yeah.
Oh, wow, that's quite an experience. What was that like?
That was incredible. That was probably when you look at inflection points in your career, things that really change how you view the world, being an assessor and working with computer-assisted models, doing it at that level as well as doing individual appraisals to defend your estimates of value at a court level, really, really refined my understanding of valuation in that whole realm of thing, right? Because in the assessing world, I have to say I was very fortunate. The assessor that I worked with who hired me, he had 2 goals for me. One is he wanted me to straighten out their commercial industrial assessments. And we had 8,000 commercial industrial parcels in this city. It was the second largest city in New England. So we needed to straighten out that modeling. the other part is, he said to me, he said, how close are you to getting your MAI? Because I want to have the first MAI in an assessing office in Massachusetts.
Wow.
And he supported me. I said, I just need to do my demo and then you take the comprehensive exam. He supported me in that. And I owe them a lot. I knew how lucky I was to find an employer that says, you know what, you don't have to work so hard at this. If you need to spend amazing. 1 day a week doing your demo, and that's what I did. To me, assessing got a little bit, there was a change in direction at the municipality level. We were not fighting back on so many appeal cases, so they wanted to have less court work, which wasn't aligned with where I wanted to go with this. So I did move back into the bank in the early 2000s.
Oh, wow. And did you go back into the review side of things, or did you go into a different level of banking?
So it was review and doing internal evaluations, which transitioned back over to review. The bank got involved in specialized lending in healthcare, so CCRCs and hospitals and some very complex real estate lending that they were doing, and very complex real estate evaluations. And I rose, I just went up the ranks. I was able to really specialize in that. I became the go-to person for that. And then after 2010, I'm on the commercial side, totally clueless what's going on in the residential world. And by 2010, everything was in a very different place.
Yes, it was. Yes, it was.
So they offered me a position as the residential chief appraiser at this large institution. And I said, sure, they need me for my appraisal experience, right?
Oh, my goodness.
And we found out it was an operations job. So how do you get appraisals in the door, quality control, review them, and then prepare it so that the underwriter can make a lending decision?
Yes.
That became very technologically driven. How do we build efficiency in something like this? Working for a bank that did 35,000 loans a year, which when you look at the scale of that, that's pretty large. Right? So, and going from zero to full QC was quite the task, but we were able to accomplish that. And then I became someone with experience in commercial, residential operations, developing quality control programs, and really gaining some expertise on the interagency guidance and the regulations on what the banks need to do.
The market right now is tough for appraisal companies. Many companies are having a hard time getting enough work with the same marketing they used to. Is your company struggling, having a hard time getting new customers, or getting additional work from existing customers? The answer to this problem is easier than you think. Do more business with the people you already know. Over 10 years, the average U.S. appraisal firm meets over 17,000 potential customers. That's a lot of people you could be doing business with right now. But it's a big problem if you don't have a proven process to communicate with them. StoryLex turns this problem into an opportunity to grow. Our advanced AI marketing tool can rebuild your contact lists and harvest long-forgotten communications. Imagine reaching out to everyone you've ever met with just one click. For the cost of 1 or 2 appraisals a month, StoryLex helps you reconnect and market to people who already know you, like you, trust you, and want to do business with you. Act now by contacting StoryLex today to turn your business growth dreams into reality. Email appraisal@storylux.com. That is appraisal@storylux.com. And now back to part 2 of the episode.
Wow, that is a lot of exposure. And was that all on-the-job learning back when you take that new opportunity as a residential chief real estate appraiser?
It was totally on-the-job training. I'll never forget a lot of data, right? So you have to understand what the appraisers are doing, not from quality control, but just getting the stuff in the door.
Yes.
And trying to get reporting and trying to understand, when you're dealing with 35,000 appraisals, you need to know who's doing what.
Yes.
Trying to, instead of drilling down, because it's such a transaction-driven business, you can only look at samples of certain transactions. So you need to get into the greater picture. And I have to say, I specifically had to take a class in Excel for appraisals to understand how to do a pivot table. This was pre-YouTube days.
Yes.
So I went out to like the Appraisal Institute annual conference, and they were off. Jim Amarin, I think, was teaching a class on Excel for commercial appraisals, and I'm like,
okay,
I definitely need to take this class. It was a one-day seminar, and he covered it for about 3 minutes. And as soon as I saw how it was done, it's like, oh, that's how I did it.
Wow.
So I got the benefit of going to the class, and I got the benefit of going to the conference.
Mm-hmm.
Fast forward 15 years, and you go to YouTube, tell you how to do a pivot table, and you get it done in about 20 seconds for free.
Yeah. It is amazing the amount of information that's available via an internet connection. That's pretty much what it takes.
Sure. Yeah.
Wow. So what was that experience like? I mean, you mentioned about you're naturally a curious person. Obviously, you were headed towards a different path until organic chemistry showed up. And yet, here you are moving from the more kind of traditional activity of real estate appraisal, being appraising properties and reviewing properties, to now getting into operations.
It was a challenge, and I took it as a challenge. It's like, we have this problem, and let's see how we can solve for it, and how much better can you make, how efficient can you make the process. And trying to rein in 25 reviewers to be on the same page, I found, was a challenge, right? So here you have, I've always said about review appraising, the most difficult thing is you're making judgments about other people's judgments. Right? So
wow,
that can be a little bit of a challenge, right? So, and you have varying levels of experience. We took a position when we were building out this review department because they wanted to give us a lot of underwriters. We have this excess capacity of underwriters. They said, well, how much experience do they have? And they said, well, between 10 and 20. I said, I don't want them because I needed somebody with a fresh slate.
Oh, I see.
To say, this is the way, the process to review an appraisal based on what our standard of review is going to be. Right. I did learn that, each bank has their own standard of review to a certain degree. There's a USPAP standard that you try to review towards.
Yes.
But bank has risk tolerances that they can and cannot go past.
Yes.
So learning that and retraining people. So I learned about training people with no experience. So retraining people who have had some experience to try to, broaden their view on things, and to say, well, because this comp is more than a mile away and more than 6 months old, it's okay. Forget about what you were taught by the title company 20 years ago. It's okay to use this, and here's the reason why. So we would do a lot of one-on-one training with reviewers to get everybody on the same page. And the other piece to that was panel management. I think when I started on the review side of the residential side of the bank, I would call appraisers and they would say, "Who are you?" I haven't spoken to anyone at this bank in 3 years, right? Because 2007, the whole Andrew Cuomo and valuation independence.
Oh, yeah.
Did, right? And
can't talk to you. Can't talk to you. Can't talk to you. Can't talk to you. Oh my gosh! Please stop it.
Right. And then I would spend time on the phone talking to the appraisers, and I said, "No, you can talk to me. Okay.
Yeah.
This is the person you can talk to at the bank. When Joe loan officer calls you or Jane loan officer calls you, don't talk to them. You just give me a call, and here's my number." And
yes.
The one thing I learned in the assessor's office is it's a relationship business. And when I took that approach on the residential side of things, is rebuilding those relationships, taking the time. Relationship building is important because it builds confidence.
Yes.
And when you're dealing with appraisals, it all comes down to confidence and trust.
Yes.
So anytime you have a quality program with appraisal, you need to make sure that you're aligned with people that you trust.
Yes. Makes a world of difference. People do business with those that they know, they like, and they trust. It doesn't change.
Sure do.
Wow.
Absolutely.
What an amazing exposure.
Yeah. So then back in 2020, I was approached by the company I'm with now, Rigora, who is a leading technology appraisal platform, the interface between appraisers and the lenders.
Mm-hmm.
And they were looking for a compliance officer. And when they reached a certain level, I jumped ship. I mean, I could have stayed at the bank, punched my card and said, I'm going to retire in a couple of years and we'll be fine. Or I can move into something that's exciting. And I work with people that they want to improve the process. And so one thing that I learned about banks is banks want to have really good processes.
Got it.
They want to have efficient processes.
Mm-hmm.
But sometimes at what cost for that efficiency?
Yes.
It creates another inefficiency down the line. And people are only very focused on what their little piece of the cog of the wheel is.
Yes.
And when you get into something like building an appraisal platform, you're improving multiple processes for multiple people. You're giving something to your client that several areas of your bank are going to benefit from. So on the residential side, your processing, your opening department is going to benefit. Your underwriters will benefit from something, and then your quality control people will benefit from something. So that's been very exciting, and there's just been so much change in the residential world. Staying on top of things, it's not dull. It certainly is not dull.
Oh, that is definitely the case. What you went to a company at an unexpected time where the country was going to go through some massive change, and we're still going through different kinds of change. What have been some of your big takeaways in that last 4-ish years you've been there?
In the last 4 years, there's a lot of people out there that are open to improving things, and they understand that while their processes may have been good 10 or 15 years ago, mm-hmm. that there is room for improvement.
Got it.
So, a lot of our new customers, we've had tremendous growth at Regora in bringing in customers. And when you look at some of these people, it does kind of floor me. There are some people that have been doing things for the same way that when I entered this business 30 plus years ago. And bringing that change along, you don't know things can be better until you try them. And it's really difficult in a process-driven business to make change. I mean, I used to joke, there's a side of me that's kind of flippant and jokes around a bit. I always say when the bank wants to change a process, they'll send an email off to Jonathan Locke, right, the 17th century philosopher. And if he says, let's go along with it, it's a good idea, then you can try it.
Oh, my goodness.
Or the other one is, Windows 95 is a great program. What do you mean I need to go to Windows 2000? Right? It's just, and it's 2010, right? It doesn't have a track record, right? If it doesn't have a proven track record for 10 years, then
yes.
It's proven, right?
Oh, wow. That is a fascinating turn of events for how things go.
Yeah. So, I'm excited. I think that while there's a lot of changes going on in residential for process and mm-hmm. There's a desire, but I really think the technology side of things is going to change the entire mortgage process. One thing that always puzzled me was while we've made improvements on the appraisal side of things, it still takes many lenders 40 days to close a loan.
Absolutely.
And I think that we're on the cusp of that really changing significantly. So that's going to, if you can cut that in half to 20 days, then the appraisal side of things is going to be even more important to make sure that things are done timely.
Yeah. Accuracy. I mean, you can get things done quicker, but do you do them well?
Correct.
And,
Correct.
How do you balance that need with this, like you said, if 10 to 15 years ago is good enough, does that mean it's still good enough today? Mm-hmm. And in a lot of cases, the answer is no.
Yeah. So it'll be interesting. One thing that if I look back on my career, and one of the biggest challenges in working with appraisers is many appraisers are getting used to and do appreciate challenge.
Yes.
But that's a very difficult process. Mm-hmm. So that's why it's so important to build relationships with appraisers, because, I never claim to be the smartest person in the room, but I also encourage appraisers, when you're talking to experienced reviewers and not just processors that are running through a checklist.
Yes.
If I'm looking at 2,000 appraisals a year,
yes,
I get to see how this appraiser does this, how that appraiser does this, and how that appraiser does this. Mm-hmm. And I can ask people, have you considered trying it this way? Or have you, I've seen it done this way in the past. And the people who are open-minded about it generally becomes a pleasant experience. The ones that are very rigid, that this is how I've done it and I'm not going to change anything, that's their choice.
Yes.
Right? And I, as a client, have a choice to make if I want to continue with that relationship or not.
Yeah, that's a great way to put it, because ultimately the client gets served, and repetition generally means something's going well.
Yes.
And there's a level of meeting expectations and fulfillment that's happening, as opposed to gritting your teeth and gutting it out.
Sure. And, one thing that I always like to point out to people is, if you look at USPAP and what this all written about is, we're service providers. Right?
Yes.
We are a service provider. Appraisals as a service. It's not I do appraisals. It's I provide valuation services.
Yes.
And that's important.
It's a huge differentiation.
Yeah.
To provide valuation services versus just providing an appraisal.
Correct.
So to speak.
Correct.
That's one.
I wish I was an artist, right? And if I decide that I'm going to commission myself a painting, if I did that perspective and says, here's my painting, I hope you appreciate it, as opposed to, I need you to do this for me as a service. Can you do that? Then,
yes.
Yeah.
Oh, I get that. A number of people listening have no idea who Rigora is or what they do. You talked about how they integral in that experience of connecting the industry to appraisers. Where do you all actually exist in the standpoint of, from a buyer at one end who's seeking a loan and therefore works for the lender, all the way through funding? Somewhere in the middle, the company you work for exists. Can you share a little bit about that?
Sure. It's the space it's in the origination space is where Rigora sits. So back in the day when we all started this in the 1970s or 80s or whenever we started, you had an appraisal desk. Someone from the bank would call you or send you a fax and say, hey, I need this appraisal.
Yes.
Right? So now there's no more people sitting in the bank, or a few people sitting in the bank.
A few.
Then no one's using a telephone, right?
Yes.
Barely. So all this stuff is being handled through a technology standpoint.
Yes.
So what Rigora does is Rigora, when it comes to appraisers, they will take your panel of appraisers and assign out to that panel based on what your criteria is.
Oh, I see.
Or they can integrate with an appraisal management company. Mm-hmm. So they enable lenders to have a virtual appraisal desk, and generally with fewer people, right? So it's a resource, it's a resource gain or loss, however you would look at it.
Yes.
But it's building efficiency. I go back to that savings and loans day, and we had a residential manager, and he was great. And, I was one of the guys who said, we need to have a computer here with a tracking system of what we're doing. And he'd hold up his notebook and say, here's my tracking system.
It's right here.
Right here. And I just said, Dave, what happens if you get hit by a bus?
I'm not going to get hit by a bus.
Yeah, I'm not going to get hit by a bus.
Oh, that sounds familiar.
So on the Rigora side of things, so we assist, we have tools, automated tools to do some review to help to assist with your review process. It can augment your review process. We integrate with multiple loan operating systems, which is, giving us the ability to increase our client base. We can handle, these payment processes that we support through payment vendors. So really, it's a one stop, pretty much a one-stop shop for a loan origination department.
That's great.
What they need to do. And it gives the lender the controls, and it provides the security that they need. It's a secure environment, and it also, if you need to be compliant for influence, you don't want your loan officers talking to the appraisers, then this is a great way to do that, to achieve that.
That's fantastic. And I think one of the more interesting things, based on so much feedback we've received over the recent years and the multiple seasons of guests, is people that are in the space they're in know the space, but they don't necessarily know adjacent industries or activities. They don't necessarily know that a peer that might have the same amount of years of experience and even some of the same credentials has a totally different set of responsibilities in an adjacent, or in this case, completely foreign line of work. And yet they're like, hey, well, you two are peers. Well, yes and no. And your experience there working at Agora, which is all about supporting from the loan origination side, what used to be the old real estate appraisal desk. And obviously some smaller lenders still have that, and specialty type of things, those definitely still exist. But with so much more technology being used, and the effort to, like you said, cut the loan closing period from 40 days down to 20, and probably they'll want to cut it from 20 down to 10. And one day, who knows, they'll just, I can't speak for, and you don't need to speak on behalf of any of your clients, but I see some of the integration that a number of banks are doing for their clients, but that just speeds up their ability to just say yes when that client, aka borrower, comes to the bank and makes a request. So like, well, we already have all of your data, we have all of your reporting or filings, and we don't have to make any new requests other than, oh, you're buying a particular asset and we just need to validate that, or verify or confirm that it all makes sense. But we've known you for a long time, even though we've never talked to you.
Mm-hmm. Yeah.
It's a foreign concept compared to coming out of college setting and sitting there doing some research for an appraiser.
Right. Going through MLS books, going over to the photocopy with MLS books and making sure that the grid paper is in his folder. And yeah, I'm really excited. Look, right now it's very difficult for appraisers.
It is.
And I know on both sides, on the residential, and I talk to the commercial folks, and fee compression is a real problem. And,
yes.
And there's a lot of challenges in this space, but appraisal needs judgment. Appraisal will always need judgment, and machines are not going to be able to pick up on when judgment needs to be imputed.
Yes.
And, I've seen some really great stuff. I did a study with our loan origination people back in, I think it was 2016.
Okay.
When I was asking where the borrower estimated values were coming from, right?
Oh, all right.
And I learned, and I wanted to fall back on some of my assessing skills.
Mm-hmm.
So it's like, okay, let's go to Zillow.
Yes.
On every single application we have for a month, and let's pull in a Zillow application. Put in a Zillow number, and then what the appraised number is, and let's see where things lie.
Yes.
And sure enough, it was a bell curve that said 20% of the time it's under the Zillow value will be too high.
Yes.
60% of the time you're within 10%, and 20% of the time you're more than 10%. So the person I was showing this to says, well, this is really exciting. And I said, no, 40% of the time your number's wrong.
Yes.
So 40% of the time, if you make 20% of the time, half of that time, if you make the loan, you may incur a loss if you lose that property.
Mm-hmm.
And at 20% of the time, you're turning away customers.
Yes.
Oh, I don't want to turn away customers. So the reliability here and for all the criticism that appraisal quality control gets, it's a risk. It's a risk mitigator.
Yes.
Not only for your institution, but for your community. right? You don't want to have one bank making bad loans. It's one thing to have 10 different banks making one bad loan as opposed to one bank making 10 bad loans.
Very much so. And those, as you touched on, that had the opportunity to live through the S&L crisis and deal with RICO and everything else and all the swaths of busted real estate. They don't want to go through that again, and they don't want to expose other people to it in the process.
No, it was brutal. The S&L crisis was bad enough on the commercial side.
Yes.
But the Great Recession was, from a residential side, that was such a disruptive. We on the appraisal side, we saw the disruptions from the S&L crisis, but the disruptions from the Great Recession were far beyond what happened in real estate. I mean, people's lives were really changed. Average people's lives were changed.
Yeah, that's true.
And it was brought down to the household level.
It was.
S&L crisis wasn't at the household level.
No, that was definitely not. It hit deeply to a small segment of the population as opposed to the Great Recession that hit broadly.
Yeah.
And deeply.
Yep.
To a lot of people. Goodness. Well, I mean, Ken, given everything that you've seen and experienced, and unlike many in the profession, you've really had an opportunity to gain a lot of exposure with depth in different real estate valuation responsibilities. Like, what are you optimistic or looking forward to over the next 3 to 5 years?
I am optimistic for technology. I think technology is going to give us some tools that will make our lives easier, right? But anyone who's got 30 years of experience in this business will tell you that, 8 of the 10 technological advances that I've seen in the last 30 years have gone into wastebasket, right? But it's finding those 2 that are really going to improve your process. I think people who are open-minded on their business model, I think they will succeed. And because there's a need for appraisers, and not just on the lending side. Mm-hmm. Those people that can really spread out their client base and have the adaptability to adapt their processes based on their clients' needs are the ones who are going to succeed. And I think, there's a lot of opportunity. And I've been fortunate. Michael, you've been fortunate. We've been in this business for a long time.
Yeah.
There's a lot of gratification that comes out of what we do.
It really is.
It's never a boring day.
Nope. That's true.
Day to day, you get to meet interesting people. Some more interesting than you would like.
Yes.
Some less interesting than you would like. But boring is good. For the most part, it's a very fulfilling career. And what I always tell my residential people is, you're helping people make a change in their lives.
Yes.
Right? That first house is huge.
It is.
To so many people. Or that first business is huge. Or, as people are progressing along their path, whether you're a real estate developer, a property owner, an investor, or a homeowner, as people are progressing, you're part of that. You're part of that success story.
That's an important reminder that just don't hear enough about, especially with all the news. Most of it's not positive around people in the profession and attacks on it. But nonetheless, it's such a contributor to a monumental shift in people's lives and futures.
Yeah. And I think, on that front too, I think the more that we can do to improve how we communicate our process and communicate our results, we're just going to be better off as appraisers, and the profession is going to be better off, right? So there's a big push now for reproducibility. You're not going to be able to reproduce every step in the appraisal process, but the more transparency there is, and the less, well, trust me, I've been doing this a long time.
Yes.
I think the better we will be.
No, that is fantastic. Ken, I really appreciate you sharing your perspective and giving your decades of experience and your outlook for the future. It's encouraging, it's refreshing, and it also points of possibility for people that what they're doing doesn't have to be what they continue to do, and be open-minded to, like you said, here I go from working at a firm, changing to another part of the country, moving into a different market, and then moving into a different form of valuation, going into the computer-aided modeling in the assessing world versus the individual valuation of properties, and then over to the banking, and then to review, and then I mean, it's just a wonderful perspective on what's possible, and never a boring day, and heck, never a boring opportunity for employment, Ken, is what you guided us for.
Absolutely. I've always tell people I've never not had a paycheck, and I've been very fortunate. I've been very fortunate with that. So
that's wonderful. That's really wonderful. Well, Ken, I just want to say thank you again for joining us here on Perusings, the Appraisers on Purpose podcast.
Thank you, Michael. Appreciate it. And keep up the good work. It's always interesting to hear the stories that are told with these podcasts, and keep it going, man.
I agree with you. And you should agree with Ken, too. And make sure to not only subscribe if you haven't done it already, but share the love and invite somebody else to also appreciate what Ken has shared with us, these words of wisdom and perspective for the future. Until next time, my friends, have a great day.
Thanks for listening to this week's episode of Perusings, Appraisers on Purpose. We hope you enjoyed learning from the amazing professional paths and achievements of our beloved guests. Before we go, please subscribe on your listening channel, Spotify, LinkedIn, YouTube, and other podcast channels to hear more from appraisers and valuers regarding their life and their work. After you drop a comment below, who is one friend and peer you can generously share this episode with? If you have any suggestions or questions for future episodes, we'd love to hear from you. Just send us a message on LinkedIn and we'll be sure to get back to you. Thanks again for listening, and until we're together again for the next session of Perusings, Appraisers on Purpose, create the change that you seek.